Hi everyone, this is a technical analysis on WTI Crude Oil. Let's start with some fundamental background first. Crude oil continues to hover near the highs as the supply tightness remains at the center of the market's attention at the moment. In fact, Saudi Arabia and Russia are sticking with their production cuts, and the resilience in the global economy is supporting higher prices. The bearish case is that the bullish sentiment in the market is getting stretched, with many participants starting to call much higher prices ahead, but such high prices are likely to weigh on demand even more, eventually leading to a drop. Now, on the daily chart, we can see that after the breakout of the key resistance around the 83 level, crude oil just kept on rallying with almost no pullback towards the next resistance around the 93 level. The price recently pulled back into the red 21 moving average, where the buyers stepped in again, targeting another push into the 93 resistance. The sellers are likely to pile in around the resistance with a defined risk above it to position for the top and much lower prices next. On the forward chart, we can see that crude oil is diverging with the MACD right as it trades into the key resistance. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, we got the first pullback into the support around the 88 level, where the buyers piled in with a defined risk below it to target another rally into the 93 resistance. This push might be the last one, as the divergence will be much stronger at that point, and such high prices are starting to weigh on demand. On the 1 hour chart, we can see more closely the strong rally from the 88 support and the break above the trend line around the 90 and 50 level. The buyers might want to wait for a pullback into the 19.50 level, where we have the confluence with the broken trend line and the 38.2% Fibonacci retracement level and the red 21 moving average to increase the longs into the 93 resistance. The sellers, on the other hand, will want to see the price falling back below the trend line to pile in and target the break below the 88 level. This week is pretty bare on the data front, and the only report that might weigh on the crude oil looks to be the US jobless claims tomorrow. Strong readings are likely to keep crude oil supported in the short term, while weak figures might weigh on sentiment and demand outlook and drag crude oil prices down.